Good evening, everybody. Welcome to the market strategy session for the week of April 20th, 2015, or April 19th, 2015, if you're Jewish. We start our weeks on Sunday. Thanks, everybody, for joining us. Not quite 8 o'clock yet. Not just turned 8, so there we go. Let's go through the upcoming economic reports that are due out this week. The German ZEW economic sentiment, 5 o'clock on Tuesday. Existing home sales and crude inventory on Wednesday. French flash manufacturing, German flash manufacturing on Thursday, along with the weekly unemployment claims. And then you got German IFO business climate, Eurogroup meetings, core durable goods on Friday. Now, a lot of these are pre-New York market. They're in the overnight session in Europe. So, by the time the market gets to the New York Open, but it can still cause a gap. And that's all I'm really looking for here. When I go over the economic reports, it's more for, can they move us pre-market? Can they get us a gap one way or the other? And if they are taking place during the trading day, you want to make sure that you are flat or that you have in-stone stop losses so you don't get shaken and bacon, so you don't get shaked and baked. All right. Now, the fun part, earnings season is in full, it's going to be in full swing. It's close enough. It's starting to be full swing. Checkpoint systems, I don't know, they're not going to probably do anything that'll move the market. Just go through them. You got to go through these, see if anything. Halliburton, maybe, but not really. And this is just Monday. Zion Bank. I always like looking at Zion Bank because usually it doesn't get looked at by a lot of bank analysts, bank technical analysts. They just sit with JP Morgan and Bank of America and Citigroup. Amgen, Broadcom. Let's see what else we got here. The big double D. Yeah, that's not. Doesn't look like that's going to move us either. ISRG, that's not going to move us. That's my 5-year-old going berserk. He just had some yogurt cake. Verizon, yeah, this is Yahoo. Here's Yahoo, so that's Tuesday. That's what I used to consider the start of earnings season officially. Let's see what else is coming up here. There'll be some more. You'll see. They're pretty busy here. eBay, it's not going to move us. Let's see what else. Did I miss Apple yet? No, I didn't miss Apple. I always miss Apple. But you don't have to miss it because they'll talk about it so freaking much on TV. You're never going to miss, unless you're not watching TV or watching any of the websites, you're never going to miss when Apple reports because they are going to talk about Apple and Google and everything else. What else is coming up? You see it's pretty busy here. See it's pretty busy. Here's Capital One. I mean, none of this is really going to have much influence on us. Here's Google. Okay, they usually report in the first heavy week. They can definitely move us if there's a surprise. Probably not, though. Juniper. I used to remember we used to watch for Juniper and Klatenka and all these, but those were the old days, laddie. Microsoft, again, what are they going to say? I mean, it could spook the market, I guess, but probably not gonna. Anything else important? No. And then Friday. Okay, Friday, BIIB, so that you got to watch. If you're a biotech trader, you like to trade the bios. What else? That's really it. So we got some pretty good, decent amount of economic reports. We have a ton of earnings reports. The market is continuing to chop around. Remember I talked about this a few weeks ago, how everybody's looking for either the market to correct or rally. And I said, well, what about the third option, which is go sideways for a while? And that's exactly what we've been doing. But we're contracting the edges here, which even Paul will tell you, even someone of limited technical knowledge such as Paul will tell you, is a triangle. Okay, so what does that tell us? That tells us that we have to be on our mark here. We have to be watching because a move is coming sooner rather than later. I would love to say it's going to the upside, but you could see this is really getting priced down to an equilibrium. You have to respect a potential downside break if it comes and if it sticks. The trend is up. We're above moving averages for the most part. I mean, we're below a couple of the little ones, but for the most part, that's one day, and we'll be right back above them. So we're sitting on 3 of the moving averages. We're above the 200-day, which is important. We're in a good trend up. You know, you would figure that it bodes well for breaking to the upside, but the triangle tells us let the market tip its hand. It's becoming a difficult market to trade because a lot of people rely on the market to give you direction and then dial down, right, what Paul calls the top-down approach, which is the market first, then to the sectors, and then to the stocks. But when the market's not doing anything, it becomes what they like to call a stock picker's market. I always think it's a stock picker's market, but what do I know? So the strategy is really to look for good quality setups in individual stocks and then look to see if the market can finally break out of this logjam and give you some wind at your back. All right, so without further ado, I'm going to hand it over to the uglier part of this tandem, Mr. Schatz.
You got that right.
And I will be back and answer all your individual stock-related questions.
Good Sunday evening, everybody. It does not feel like Sunday in our house because my kids are on vacation next week. So it just feels like yet another Friday or Saturday night. Actually, it feels like Saturday night. I hope you guys had a great weekend in the Northeast. It was one of those Chamber of Commerce weekends. 80 and sunny yesterday, 60 and sunny today. Beautiful outside. I had my daughter I coach her team. We had softball practice Friday night for 2 hours. Then she and I worked out. Then Saturday morning we had softball practice for 2 hours, and then we worked out. And then I had to coach my little guy's 7-year-old team. And then at about 1:30 I was about to pass out. And now my body is sore and achy because I'm going to turn 49 years old next week, and I'm in crummy shape, having not skied hard in a while. So it's going to be an Advil kind of night, maybe some bourbon and some Advil. And we also actually got the grill going today. Almost had dinner outside. It was really nice. Hit golf balls today with my 7-year-old. Visited Dave & Buster's. Those of you who follow me on Facebook, or I'm friends with them on Facebook, we did Dave & Buster's yesterday for my middle guy's birthday party. That I've never been to a Dave & Buster's, and I may never go again. Even though the food was really excellent, great drinks, but the talk about sensory overload in that arcade. I'm still kind of recovering. So we begin the market week. Little on the defensive after Friday, but nothing that we haven't talked about. We came into last week, long-term and intermediate term, still looking good. Short-term, a little murky. Sentiment was getting a little frothy, and market's still going in that trading range. I'm going to start with this chart right in front of me, which is the NYSE AD line. And I ask the same question every week. Tell me why this is important. Tell me why this chart is important. Yep. Yep. You guys all get the idea. I say it every week. And maybe I'm wrong. Okay, maybe this will be a precedent setter and and they'll get me as well as everybody else. But as a really good, it's a good predictive indicator. The AD line just topped here. Bear markets typically don't begin with an AD line that just peaked with the market. The AD line normally peaks 2 to 22 months before the market does. So the internals still look really good. What a beautiful, if you didn't know what this was, you'd say, man, someone's making what pile of money here. Higher highs, higher lows. We take 2 steps up, 1 step back. This is a really nice, orderly advance. Now, given the fact that it's the AD line and it's one of the pretty good signals of health, hard to argue, folks. All-time highs were just last week. So I don't think a bear market just began. I thought 2 things were interesting. One, that we know sentiment was a little frothy. People were a little too bullish, a little too positive. And then I hear Muhammad El-Arian say that he's essentially all in cash, which is a head scratcher. How the heck could he be? Which means he's been all in cash for a while. And then there's a headline in the USA Today saying that we've got the first year-over-year earnings decline since '09, blah, blah, blah. Earnings are a disaster. I mean, are they a disaster? I don't think they're a disaster, but maybe they're not the greatest. I also think and continue to think the same thing. And I'm not an economist, so take this with a grain of salt, but I think the winter softness in the economy will be washed away in the spring and summer. I think the economic numbers are going to get a little stronger in the spring and summer. I think the full effect of the crude oil collapse will help the consumer in the summer. I just think it's going to get a little better all around in the spring and summer for the economy. Okay, so let's go through the major ETFs. We'll start with the indices. I mean, what happened last week? Look, you got 1, 2, 3, 4, 5. So here's your week. And we are just a little bit lower, maybe 1% lower than the week before. It was not an exciting week at all. Friday was the only real day of excitement where we were down pretty hard, but we closed off the lows. We still remain in this mini range from February. So here's your range. And then frankly, this is a big range from early December. Got a big range with a slightly upward bias. That's about all you can say. Could this be a major peak developing right here? Sure. Certainly possible. Do I think it's the end of the bull market? No, I don't. So I don't think we're about to go down 20% or even 10%, but could we from this setup? Yes. We're just not there yet. We've got some more work to do to keep moving out sideways. But as someone who is bullish and who's been bullish and who has an awful lot on the long side, you know, I look at this as we're consolidating. We're waiting for fundamentals to catch up with the market. We're waiting for things to settle down, maybe in the Pacific Basin, but things aren't that bad. S&P looks almost exactly like the Dow. Let's not spend a ton of time on it. Same trading range, short term, same trading range, intermediate term. Could we poke to the bottom? Sure. Would I buy? Yes. Maybe we poke out to the bottom first and then go up. Maybe we poke out to the upside and then go down. I do not think the highs are in. There's nothing here that says the highs are in. We're just going sideways. We're boring everybody to death. As Tiny said, we're winding up for a pretty good move. And here is where you have to be a little more sanguine, right? Here are the mid caps. I mean, they're 2 days off of an all-time high. They've never been higher than they were last Wednesday. So really hard for the bears to get too excited when the mid caps just make an all-time high. And the small cap, same thing. 2 days removed from an all-time high. So this chart looks a lot better than the Dow and the S&P. And the Qs, again, look like the S&P. Maybe it dropped weaker, but let's not get carried away. Short-term trading range, intermediate-term trading range. Eventually, I will remain that we resolve to the upside, even if we have a short-term decline first. Europe, which, as you know, I like since early in the year. We're 1 day off of 2015 highs. 1 day away. Hard to get so bearish here. And emerging markets, which I've been all over, 1 day away from 2015 highs. You know, do I like this little pattern here? No, because we went from a new high for the year to probably a 7-day low. Not the greatest setup, so, but still nothing that I'm going to be more concerned about than just a really short term. So those are the major ones. I have nothing new on the emerging market side. I still own Philippines. Looks fine to me, pulling back constructively, and I think you're getting a leg higher in the Philippines. And I am still long China, having sold a little bit, I think last week, week before here. So I still love China. And they relaxed reserve requirement ratios over the weekend. Although, interestingly, markets really don't care. We're up a little bit, 25 basis points to 13 basis points. But the Chinese did get a little more dovish. Let me pause and see if we have any questions. Let's see. Ricardo, no, I don't think the market action looks like a top. It could be a short-term top. All right, let's just look at the Dow, which is one of the weaker indices. This could be a short-term top, kind of like this was, but I don't think it's anything more than it could be a short-term top. Don't get so, don't make the mistake of getting too bearish too early. For 3 years, every single decline, the market has rescued itself right when it needed to. And you got to lean that way. Don't be in a hurry to get bearish. There should be plenty of time. There's not right now. Any other questions? No. Okay, let's go on to sectors. 3 key sectors. The banks. You know, until Friday, banks were hanging in nicely, still with their upside. Let's take a little longer term view. Here's a weekly chart of the banks. Hard to get excited either way with this pattern. So we'll wait and see. Certainly not awful. Here are the trannies. They just continue to go sideways. We dropped out at the bottom 2 weeks ago, came right back, and now we're kind of waffling. So it's getting more pronounced. The trannies saw their last peak in here. It looks like they're on December 1st. and the Dow peaked in late February. So we continue to have what I wrote about in my blog and in my newsletter, a Dow theory non-confirmation, a Dow theory divergence. This is a cause for concern. Now, how do you fix this? I mean, if the trannies go right back and make a new high, obviously it's going to be fixed. But this is how bear markets do begin, when the trannies don't confirm the Dow. So this would be one piece where I'd say, okay, we have a little cause for concern because everything's not in gear to the upside anymore. Right? Again, let's not get too bearish yet. There should be plenty of time. And finally, the semis. There's nothing here right now. They're waffling. They look fine, but they're not super bullish and they're not leading, but they're fine. I have no concerns for the semis yet. Okay. Other sectors. Here's software. Looks like the market. No real comments there. Telecom, one of my sector plays of the year. Pulling back. I still think it's going higher, but it's not, looks anything but exciting and sexy right now. Diversified financials looked worse last week, and they look a little worse than the banks, but nothing bad. I mean, it's really, grasping at straws. Nothing that's that great or that bad. So I'm going to check Berkshire Hathaway. Here's interesting. Berkshire Hathaway, Warren Buffett stock. As most of you, or many of you know, I've never been a Buffett fan, and I'm still not. This stock clearly is lagging. Clearly. Peaked, looks like the transports, right? Peaked up here and is now falling out of the bottom. It's been oversold for a couple of months. Here's where it just doesn't matter. The decline isn't that great, call it 10%. But when the market's been okay, this one is clearly on the laggard side. Let's go to the consumer. Very important chart right here. Very important chart. Anything to glean from it? No. We're in a trading range. We'll see where it wants to break. Definitely going to ring out some weak-handed holders as we go sideways. But there's really nothing here to take away yet. It's still a leader, still hanging in. Let's see which way. Someone's going to say this is a head and shoulders top, which, if it's just a pattern, I'd agree with you. I don't really believe in the head and shoulders patterns on indices or sectors. XRT, a subset of the consumer discretionary, looks a little stronger. Nothing bad. Working off right here, stochastics working down towards the bottom without much price damage yet is definitely bullish. The home builders, which is one of my groups for the year, looks fine. Again, we're pulling down stochastics to oversold. Price is not depreciated enough. We're getting there, but I think it looks fine. Industrials, more economically sensitive, really looks like a little weaker than the S&P, but just going sideways. This is frustrating both bulls and bears. It should eventually resolve to the upside, but it definitely is not leading. Materials, which I do not like and haven't liked all year, are going sideways as well. It's almost like we should go to bed and wake up when the market decides to get busy again, because this is getting kind of boring. Materials, there's nothing here. I was on, I don't know if any of you saw me on Fox Business Tuesday, 6 to 7, but I said two stocks I kind of like as laggard plays were Caterpillar, which is in the materials, and IBM, which is a quasi-business service tech stock. I think they're good laggard plays. What else do I like that I call on the Payne show? Called a bunch of muni bond ETFs. Everyone's bored to death with that. Can't remember. Okay, let's go on. Energy, which if you recall, I've been long for, I don't know, 5 months, and I was early and wrong, and now we are having fun. XLE, I don't think the party's over yet. I would like to see the gap close first, which also coincides with the 200-day moving average, a little bit higher, and I think we can get there in the next couple of weeks. OIH, where I do have a position, I don't think the party's over here either. If we do get a gap close, I will probably sell half my position, but putting the cart before the horse. This is a really nice rounded bottom. Bottom, bottom, double bottom, triple bottom. Looks pretty good. I'd like to see it jump up, have one more good rally, and then let it pause and maybe put in a cup and saucer. A lot of things it could do down here. Let's see what else. Healthcare, which is one of my biggest positions, has done nothing. I still like it, but it really has done nothing. Boring. Biotech, my other huge position, is hanging in. I think Tiny said Biogen reports earnings this week, but there's really been nothing going on. Another boring sector. Economically insensitive or defensive. REITs, which I think I still own. Thursday and Friday had good action and not a great tape in the market, so maybe it's trying to turn. Stochastics are at the bottom, so maybe that's going to help us. It's kind of time for the REITs to rally. They've worked off the overbought. They're down at the bottom of the range. Time for REITs to get going. Staples is boring me to death right now. Really defensive stocks, the Procter & Gamble's and Clorox's, doing nothing. They look like the industrials. There's nothing going on. And utilities have been very disappointing. So nothing I want to look at here. Yuck. And that's it on the sector side. Any questions on sectors? Let's see. Wouldn't you say that the banks, with almost every moving average so flat now, that's close to making a powerful move? Okay. Joanna wants to know, are the banks getting close to moving? I think everything's getting close to moving. It is just really boring. All the moving averages are what's called nesting. They're coming close together in a convergence. They're converging together like they did here. The ADI, I'm going to guess, is down. Yep. Your average directional movement down to 11. So which means the trend is really, really weak. Everything is getting close to moving, guys. But it could go on for another day, week. It could go on for another month. But we're getting ready for a move. Okay. Any other sector questions? Mark, I will get to the Euro in 2 minutes. All right, let's go on to fixed income. TLT, I continue to own. I have a very big position in TLT. As you know, I was long it the whole, almost all 14. I was long it into 15. I was long it through February. I sold, I can't recall, somewhere in here, and then I bought it back in here, and then I think I sold it in here and bought it back. So I bought and sold. We've done well, but it's good to note that we haven't seen a high in several months in TLT. It's no longer a quasi-leader. Should be a lot higher given the poor economic data if you believe what was reported. So I like Friday's action, although the market was so weak that it's got a later day flight to quality. See what happens this week. I'm still long, still think it's going higher. The yield on the 10-year. I know I'm a broken record. I continue to believe 150 to 230 is the range for the whole year. And there's nothing going on. So last week we came in and we said, got to give the yield bulls or the bond bears benefit of the doubt, and that lasted all 2 days. and that's it. But it's really nothing going on there. Junk bonds. Here's JNK, which I am long as well. We talked about, why does this chart look different? Hold on. Oh, I don't want MACD up. That's why. There we go. So it feels like every week it just creeps higher. Friday it hurt a little bit, but it's been a really nice run. Again, this does not move like Google or Netflix or Shake Shack. This has been a nice little run. I'm still long. I'm getting close to getting out because the trend is now turning to the downside, but we'll see what happens this week. Still no warning signs here. I mean, if we were really in trouble, junk bonds would be in a downtrend when stocks were moving higher. We could like this. We don't have that now. And plain vanilla mutual funds on the bond side, we're a couple of days away from new highs right here. So not a lot of warnings again. The transports are probably our biggest warning sign. Okay. The dollar. Continues to consolidate. It's funny, here's where this move, everybody got bullish the dollar. Because people were pretty bullish during this rally. And we worked it off nicely here. And then every Wall Street guys are talking about the dollar here. And then what that lead to? Stop the whole rally. Now we're going sideways. This is pretty good action. I like this, that again, the bears can't make any meaningful downside headway. So that's good. And we can draw this out a little farther and then get another move higher later this year. The euro, I mean, it's clearly rallying, but I think you got to sell any rally. I would not want to be long the euro for anything more than a quick trade. So you want to be long right now, be my guest. I have no arguments. You want to be long for the next year, have at it. I won't follow you. It's going to be really hard to get the euro rallying significantly unless the U.S. economy falls off a cliff and we're going back to some overly incredible money printing. And the yen, I'm going to make the same kind of made for 3 years, sell any rally, and we're getting really close. If the yen can poke above these highs right here, maybe like a great sale, 83-ish, getting closer. And the Bank of Japan's been really quiet lately, so let's not forget that. They're almost due for another QE announcement. Gold, nothing. Pair of twos. Gold's going sideways. Eventually, I think it falls out of bed to the downside. We make a better bottom later in the year, but there's nothing exciting here at all. Could it rally a little bit? Sure. Could it fall from here? Sure. I don't have a strong conviction on gold or on silver. Here's silver. There's nothing to excite you either way. Platinum, I don't know, same thing. You're back into this heavy, heavy area of supply. Nothing. Boredom. Copper, it's very important to me because I just got pricing on putting in a partial copper roof in the back of my house. So now I hope copper collapses. Maybe get my price down a little bit. But copper, we talked about buying it down here. We did a good job. We talked about selling it. Here's where the sale point is. Here, for me, it's a pair of twos. You're right back into the equilibrium point. Do not have a strong opinion either way on copper. Natty, oh, actually, you know what, before I go Natty Gas, let me finish gold and silver. Here's the GDX, the ETF that a lot of people trade. I can't get excited at all on the long side. I'd probably lean on the short side over the short term, but I can't get excited here long. Sorry. Natural gas. Still looks, I mean, doesn't even move. It's brutal. Hard to get excited here either. Maybe lock in some natural gas if you can for next winter because these prices are really low. But it's very hard to get excited in either direction here. Crude oil, which I own personally, still looks pretty good to me. Now, we've got our low, a test of the low, a really nice bullish engulfing. We're rallying off of that. Where's this line from? Hold on. Let's see where this line is from. So we know factually that, and I've mentioned this forever, here the low was 42 bucks, and we know that anytime crude oil collapses, the ensuing year it rallies 50% from the low. So 42, add $21 on there, and you get the 63, 65 area, which has been my target. Are we going to get there? Yep, I think we will. Did we just see the ultimate low? Don't know. Don't really care. But I've been bullish on crude for many months, and I think we get one more pop up. Can we go down? We did energy, we did gold, we did mining. What did I miss? We did the euro, we did the yen. We looked at some commodities. Okay. Let's look at wheat. Nothing. Pair of twos. Maybe it's putting in a low, try testing again, but there's nothing exciting here. The failure was really obvious a couple of weeks ago. We got kind of a bearish engulfing right at the 200-day. Boredom. Corn, nothing again. We're still in this range. There's nothing exciting about corn either. And by nothing exciting, it's not bullish or bearish. A lot of these indices and sectors and commodities are just boring everybody out of the market. And that's typically what happens before you get a big trending move. Here's soybeans. There's nothing here exciting either. Sorry, pair of twos. Sugar. Had a nice day on Thursday. Not a bad week, but still nothing exciting for me either here. Cocoa. Nothing exciting. Oh my God, it's brutal. We'll do cotton and coffee. Cotton, there's nothing here either. Boredom. Cotton and coffee. Holy jeez. I mean, of all of them, coffee looks maybe a little more constructive. I still hate, as you guys know, I hate these tall red candles to come at a low. Hate them. I would rather have seen coffee scrape along the bottom a little more. But if any of them, this probably looks the most constructive, but not great either. Nothing I'd want to risk my money on. Sorry. I am Sam. JNK, I said, it's had a really nice run. I am still long, although I've got 1 foot out the door. It looks reasonably healthy for the market that JNK, continues to rally. And we don't have any, kind of Dow theory where the transports are not doing well. But I think it looks fine. Just maybe it's a little extend to the upside, so nothing really exciting there. Somebody asked about crude and OIH. How closely does OIH track with crude? So out of all the stock or equity sectors, OIH has the best correlation with crude. OIH has the best correlation with crude. However, here's the big however, huge however. All right. Here's the however. I think. Let me see. Okay. So OIH has the best correlation with crude. However, crude continued a little bit higher than OIH did in '08 during the blow-off. Crude continued higher into here. OIH already rolled over the downside. So sometimes you'll see them begin to diverge, and that's a warning sign of a trend change. But the correlation, I'm guessing, if I did a weekly correlation, I would ballpark it as 0.8, 0.85, which is pretty strong correlation. Other questions, comments, concerns? There's just not a lot going on. No, Don, pair of twos is my, it's like poker. If you have a pair of twos, how good is it? I mean, Tiny's the poker maven, not me. I've only played in 4 games my whole life for money. Let's see. On the corn chart, 200-day moving average plus with the others, maybe trend direction. Let's see. Corn. Yeah, Johanna, I would not. I see what you're saying right here, but I wouldn't get so wrapped up in this. You've got all the MAs converging because we've gone sideways for so long. I can't get excited either way. Yet. Move's coming. We're going to have a move. And almost every security we looked at tonight, they're going sideways. They're just winding up a rubber band, and we're going to let loose. Is it this week or next month? It's coming soon. This has been brutally brutal. Quick summary on S&P. Down more, bounce. The S&P, Scott, depending on your time frame, we've got a trading range here. We're wound up, as Tiny would say. You have a bigger trading range here. We're even more wound up. I don't think that we take out the lows of the big trading range now. Could we poke below here? Sure. Would I be a buyer? Poking below here, I don't think we're there yet. So maybe we poke below the trade. I got no conviction in this comment. Maybe we poke below the lows, stop everybody out, and then blow out to the upside, or vice versa. That seems like to be plausible. I just don't have a strong opinion yet. Let's see. Can you go over oil and gold? Yeah, Linda. I like oil. I've liked oil for a while. I like the action oil, even when you all disagree with me. I still liked it, and I'll still like it now. I think eventually we're gonna get up here into the low 60s, and that's the spot where I will sell some of my oil. And gold, I don't like longer term yet. Here's gold. I think it's hard to get excited either way. It looks eh. And it looks eh, why push the envelope? I do think a major, major, major low in gold is coming next year probably. And maybe it's around 1,000, maybe between 1,000 and 1,100. And then we go to 2,500 by the end of the decade. But I don't see that right now. I think it's just boring. And it's not time yet. Let's see. So how do you set up for a big move by having the money puts? Nandita, you certainly could buy out of the money puts and calls. So the VIX is low, which gives you that advantage. That's why you wouldn't want to be a seller of premium. Here's the VIX. And the VIX is 14, and it was 12 on Thursday. So you certainly could buy options on both ways. It's not the way I would play it. I'd rather wait for the move to get going, find a low-risk entry, and let leverage up rather than play the options here. But you certainly could, and I would not argue with you. Thanks, Scott. Scott was teasing me about my April Fool's joke. Okay. Anything else? Last call for questions, comments, concerns, quibbles. Ooh. Very quiet night. I guess it'll be interesting to see what kind of attendance we get and what your comments are if we have 1,000-point down week in stocks or a 2,000-point down week. Any inverse ETFs? Joanna, I mean, looking at an inverse ETF is the same as going opposite the ones we looked at. There's nothing that's really jumping out at me, really. Just, it feels like mid-August, frankly. EFA, yep, it's the same as VGK. So this, here's VGK. They look almost the same. EFA. I mean, we're one day off of new highs for the year. I mean, I buy weakness here. I don't think the move is over. There's the chart. Beautiful double bottoms. Beautiful. Tiny would say textbook double bottom. And the height would be 58 to 64 at 6, 64 to 70. So your target is up here. I mean, you got to buy a weakness. Maybe this could be a little bit of a, Tiny would say it's a wedge. Here's your wedge. So maybe we get a we break to the downside. But I think you gotta buy a weakness in most things right now. Let's see. Anything else before I let's see. These markets are different than 2011 in the currency market. I see. Yeah, Mark. I mean, I guess currency markets would be the only. I mean, obviously, I like crude still, but currency markets, yeah, don't have the. No, actually, that's not true because the dollar and the euro are still. There's a little more opportunity in the currency markets. I just don't think there's a lot of opportunity. You want to go dial down into some kind of intercurrency relationship between the Canadian dollar and the euro, or the Aussie dollar and the pound. But for the most part, you're just getting a huge winding up in most markets. How about individual European countries. I don't think I have my list on this computer. Let's see, do I? I don't. No, I don't have it here. So, European, I'll pull up a couple of major ones. Obviously, Germany. Most look similar. From my seat, I take the strongest country ETFs, and I buy weakness. Something like Spain. I don't know. I have a tough time playing Spain. Now we're really grasping at straws. Italy's got to look crummy too. Yeah, Italy's. What's Australia doing? Nothing. Canada. So you want something that looks okay to me? Canada. I'll look at the Canadian dollar for a second. So the Canadian dollar obviously got pummeled, got loony, and looks like we're trying to put in a bottom. Friday's action was not good, but the equity market in Canada looks constructive. So you want one to keep an eye on. This looks, I like this down here. Looks like we've got, so we're at 29-ish, and it looks like we can probably run another 8% in Canada. Japan, I've liked it for 2 years. I still like it. Yes, it's very extended, and they're due for an announcement about QE. Let's see. Last question is, will the euro bounce big if Greece leaves the euro? Probably. That's not the Greek ETF. Oof. I would think the euro bounces big on relief that it's finally over. We remove the uncertainty. And then my guess is if Greece leaves, you may start hearing rumors about another country leaving. That's what they want to stave off. Because frankly, nobody cares about Greece. It's the economic output of Woodbridge, Connecticut, which is none. So the big issue is, will they let another country do the same thing? If you had a 401k at your job, what would be your investment in equities now? Yeah, Don, I have a lot of clients with 401ks, and I would say almost all of them are and have been 100% long equities since early 2012. So, yes. If I wasn't long 100%, would I jump in long 100% now? No. I'd probably wait for a little weakness. But if I had a 401k, my clients, I have them all long for the last 3 years. Do they long all the S&P? No. I've got it pretty well diversified. We've got some Europe in there and emerging markets. Last year we were heavily in large cap stocks. This year it's been pretty much split across the board. They have some REITs. I'm trying to think what else they may have. Probably about it. Okay, I'm going to turn over to Tiny now. I wish I could talk about more exciting things. It will come, I promise you. We'll have some volatility. I'm making calls with my pants down a little bit one of these days here, but we'll come back and analyze it and have a discussion. Have a great week. Enjoy it. Ski season is officially over today as Mount Snow closes, and I go into my springtime depression. Other than that, have a great week. Catch you next Sunday. Tiny, you're up.
Everybody give me your stocks and I'll go over them.
Dude, why don't you sing a little bit while we're getting the stocks coming in, and I'll stay on.
Yeah, why don't I do that?
Dude, you ever go to Dave & Buster's?
Yeah, I'm not really a big fan.
We had such an amazing meal, but the best part was, it was really, really good. The best part was for dessert, we brought a birthday cake, and I wanted regular dessert. So instead of deciding, they have homemade chocolate donut holes and vanilla donut holes with hot fudge and then raspberry dipping sauce.
Nice.
And then they had this most amazing chocolate fondue.
I don't know where the Dave and Buster's is around here. Let's look. DaveandBusters.com.
I know there's one in the city.
Yeah, that's where I want to go, to the city to go.
Here's what I couldn't get over. It is so expensive, and the kind of the class of people in there is not exactly the Rockefellers and the Morgans and the Pierponts.
Well, how about go to Disney World? What do you think? I mean, I don't know what you're talking about. Go to Disney World.
I know that. We walked in. I had 5 kids with me, and Terry and I. We didn't get those cards. We just did it for the kids. We spent $175.
Right, but it doesn't. Right, but that's the point.
The arcade, and that got us 75, 80 minutes of arcade, and I was incensed how expensive it was, and everyone just there. It was packed.
Yeah, the people don't care. I mean, go to Disney World. How do people afford to go to Disney World? They mortgage their life.
Yeah.
And it's down here too, where I live now. It's ridiculous. Everything is ridiculously expensive. Kids want to go to the boardwalk all the time. I tell them absolutely not. I said, "What, are you crazy?" I said, "Look how crowded it is. Number one." I said, "Number two, everything is." We went to lunch, I think, once on the boardwalk when we first moved here. I guess August or September. It was like a couple of slices of pizza, couple of lemonades, and I don't even know. I think I got a salad because at the time I was eating right. It was like $35.
Yep.
You can't live like that. You can't live like that. But people don't care. They come down and they're like, "I don't care. I'm coming down and I'm going to spend the money and that's it." It's But yeah, I don't like Dave and Buster's. We got a place in Jersey called Chicky and Pete's, which is like a knockoff of Dave and Buster's.
Yeah.
They're actually local guys from Philadelphia. And it's okay. It's sports. They make amazing lobster pizza, and they make a lot of stuff you'd probably like. They're big on their crab fries, which is just fries with Old Bay seasoning. And, they're big into the Philly sports and all that stuff. So it's like, But no, we don't have a Dave and Buster's in Jersey, so I won't be going again. I know I went to one, though. So I know we.
Dude, you like Alaskan king crab?
It's okay. I'll tell you what. You have Joe's Crab Shack up there?
I don't think so.
They got a new crab at Joe's Crab Shack, and it's a weird name. It's probably not too weird for people that know, but I asked what we were for Janine's birthday, so I asked what it was, and with Danny's favorite restaurant too, by the way. So I asked what it was, and they said it's like king crab except meatier, I think. It was phenomenal. Yeah, you don't have Joe's Crab Shack up there, huh?
I sent one of my clients from this Great Alaska Seafood place. Great Alaska Seafood place. They have super colossal red king crabs. Each leg is more than a pound.
Wow, that's a lot of money, though.
Yeah, it was like
$40 a pound.
$55 a pound.
$55 a pound. Wow. It's good to be the king of Connecticut, huh?
Well, it's my biggest client, so I sent her a nice gift.
Did it get there all frozen and everything?
They overnight it from Alaska. They flash freeze it, and then so they only ship Monday to Thursday. And he lives in Arizona, so
wow.
His wife lives in Arizona, so I haven't tried them. I sent 5 pounds of those, and I sent 5 pounds of Dungeness crab, which is my favorite.
Oh, Dungeness. Yeah, they're good.
Love crab.
Yeah, it's good. I like it more and more now, especially because I could eat. It makes me feel like I'm eating a lot now. Like when I was my biggest, I would always get pissed at crab because it would never fill me up. But now
Right.
it fills me up, and it's so much work that it's like I feel satisfied. Like it took me all this time to eat it,
Yeah.
and now I ate it, and I'm not still hungry anymore. I used to be, forget it, I could do a whole pot of crab and want more. But now I just do the crab, and I'm like, all right, this took me forever, but it was also filling. So that's a big thing. All right, we're starting.
All
Everybody's
right,
like,
later.
everybody's like, no wonder you got sued for $65 million for talking about food. See, this is why. Cheetah Mobile. This is an interesting one. Wow, this is an interesting one, this Cheetah Mobile. So we're in a pennant here, or not really a pennant, but we're in a coil here. Let's see if it can get out of this or not. But it's an interesting one. I mean, it looks bullish, but got to wait for confirmation. You don't wait for confirmation, it doesn't matter, as we know. GMT, it looks lower to me unless it can get over the 200 and actually stick. What's my number one stock pick is this ANAC, which I pointed out down here in the 30s, going for a double here. You missed it. I don't know what you were doing because I talked about it here, talked about it on my video. I talked about it everywhere. Just an absolute flippin' monster. Amazing. Stop the music. What music? Is still music playing? You guys don't hear music playing, do you? Kara. Look. Oh, boy, that's not Kara. Kara. Interesting. Another interesting one. You got the little poke up here, and now it's consolidating. See, this is how big moves can potentially start. Of course, if it decides to flop down, then it doesn't matter, but you always wait for confirmation. Always, always, always. Sony, SNE. I mean, it looks strong, but it has a lot of gaps because it's an ADR, so it's going to trade, does most of its trading when the market is closed, when it's over in Japan. MNK. Yeah, a little two-step pattern back down here. I like this. See if it can rotate off of it. Looks pretty good. This looks like a nice little bull flag here on MNK. MEI. Watch the 50-day moving average. Got to watch that 50-day moving average. See if it holds. Panera. Yeah, give it, you got to give it a couple of days to digest here. I don't know what to do. I don't know what to do with it here. WBA, watch the 50-day, see if it holds. CHRW, yeah, I mean, it's falling away. It's below the 200-day. I want to see what it does in the next few days, but if that's a real break and it sticks, then this could be in for some more downside, down to the low 60s. AMC, yeah, I mean, this was a weird-looking pattern here. Then it broke down. Did have a hammer Friday, so I could see if it can move from there. Qs, I mean, Paul went over the market already. I mean, we're coiled up. Looks like we're forming a triangle here. DX, the dollar. Yeah, I don't like the way it came up and then it flapped out back down. This could be a potential flag failure if it breaks down here. But if not, still looks bullish, so let's see what it can do here. SWKS, yeah, still looks okay. Watch, make sure the 50-day holds. If the 50-day holds, this still looks high to me. KGC, if I could type it right, looks lower to me. I'm not looking to grab that here. HABT, I have no idea. I mean, looks lower, if anything. I mean, but it's just consolidating at the lows here. So I'm not rah-rahing at all. TSU looks lower to me. Looks like it wants to break down out of this. All right, we'll see. I mean, maybe it can hold here, but if it breaks, it looks like a target in the 13s on this one. So you want to watch that one, TSU. Netflix, got to give it a couple of days to digest. It's funny, my friend called me up. He wanted me to find him a a cheap put option to trade for earnings. And then he called me the day of earnings and said, I'm glad we didn't take it. I said, yeah. I said, there's no we, but I never found him the put option, but it didn't matter. But he was probably throwing $500 to it just to see. But, that's what they call a gamble, right? I mean, that's a pure gamble. There's no reason. Would he have been wrong? Of course he would have been wrong, but for what he was taking, he was just ready to throw some money at it. It didn't make sense to me. DY, and it not that it didn't make sense to me that I knew it was going to explode like that. It didn't make sense to me because you had earnings. Well, what are you going to do? Is try to start timing if we're going to miss or hit? I mean, I guess if he gets a 10-to-1 return and he hits 1 out of 6, 1 out of 7, I mean, he'll make money, right? But he's not going to hit every one, obviously. DY broke the 20 EMA. Still looks okay. I mean, I don't like that it broke this kind of wedge, but it doesn't look terrible yet. Very good. McDonald's. Have it your way. Oh, no, that's Burger King. McDonald's holding the 200-day still. That's 1 time, 2 times, 3 times. Will it hold it here? I mean, if it breaks down, could want to go down to this low end of the range. But if it holds, you got to keep giving the bulls the benefit of the doubt for the time being. WLL. I mean, just sideways. Not really doing much. Starbucks. Looks okay. I mean, it looks like the market to me. It's in a triangle. So you got to wait. Which way is it going to go? By the way, I blanched asparagus today for the first time ever. I learned how to blanch. I went to YouTube and I said, I want to know how to blanch vegetables because, the problem with asparagus for me is you boil them too much and it's just overdone. And then my wife puts them in the oven and bakes them, and they come out okay, but you got to really season them. And believe it or not, for a fat guy, I am not really a big fan of putting stuff on vegetables. I like to just eat the vegetables the way they are. So I did it today. I put it in the hot water with some salt for a minute, took it out, and then put it in a pot of ice water. And they came out okay. I mean, I need some practice. I think they were a little thin, so I think I put them in the boiling water for too long. But the next batch I will do for 45 seconds, and then hopefully they'll come out perfect, and they'll come out nice and crunchy. I put some kosher salt in. It's nice because I'm really not a big salt guy. And putting the asparagus in the hot water for that long, they say a lot of salt doesn't get in anyway. But I put the salt in because it boils the water at such a high temperature. Anyway, why am I telling you all this? I'm trying to weed out the weak hands, the non-believers. This is what the market does to you. It weeds out the weak hands. If anybody can't hear about my blanching asparagus, they shouldn't come to my Sunday night sessions. All right, EXAS. Can they break out, and can we hop to it? We'll see. All right, Appalicious. Yeah, just consolidating. It's going to move one way or the other, but you got to wait for it to tip its hand. KR, what is this? Kroger? Yeah, I mean, you're in rollover mode now. I love this pattern up here. Paul likes it too, this flat top. But then instead, that's why you wait for confirmation. I mean, you got a gap fill here. It looks like it's magnetizing towards that. So that's right under 70, so you want to watch that. Tweeter, forget her. This is looking okay. I think it's going to go back up to the highs here on Twitter. So we want to watch that. Celgene, or Celgene, for those of you who pronounce it correctly, could be in a potential topping pattern. It's not a pure head and shoulders pattern here, but it does look like a topping pattern of some sort here, so you got to be careful on it. Gilead, I mean, same old story, man. This thing just keeps forming whatever it's forming here. Eventually, it's going to start to move, and when it does, I think it could really go for a while in the direction that it finally breaks to. Delta Airlines coming down here. You got a small. I mean, this isn't a pure trend line. It's only 2 spots. But if it could break out, see if it can get up to the highs. RTRX. Yeah, it doesn't look bad. Yeah, it's a little overbought, but it doesn't look bad. Okay, Starbucks. I think we did already, didn't we? Yeah, we did Starbucks already. ISRG reports this week, if I remember. Looks bullish for now, but you cannot, ahead of earnings, anything goes. Into earnings, anything goes. But it looks bullish. Maybe it'll get a couple of days up into the report. I don't know what it's doing after the report. GMCR looks lower. Looks like it wants to test this low at a minimum. If it breaks down, it could go sub-triple digits. TAP looks okay, but overall, it's sideways. You know, I mean, it doesn't look terrible because I like this push up and now the pullback, but overall, it looks like it's just sideways here. Okay, BSX. Yeah, it looks good. This thing is strong like bull. Really, really nice looking. Z. I mean, it had this big day. What is this, Tuesday? It gapped down and then it recovered, but it's got to get back over its 20 EMA. Otherwise, it may just roll back down. So we got to watch. All right. Let's see what else we got. No, so my son has a joke. What do cats eat for dessert? A mice cream cone. Very good. All right, so nice systems. Pulling back here to the 20 EMA. A little bit of a wedge kind of pullback. See if it can go up from there. Intel. Yeah, what is Intel doing? I mean, still sloppy. You got to really kind of clean this up here a little bit. You do have the 200-day moving average as potential resistance here. It's a sloppy, you know, you got to get over the 200-day for me to get bullish again. LNCO. Yeah, I mean, again, I liked it back here. You know, I liked it back here. It decided not to continue. Now it goes down. Now it's looking like it's setting up in that little pattern again. You know, but you got to wait for confirmation. You got to get the confirmation. All right. I'm going to send this video out. See everybody next week. Stock pickers market, folks, unless the market breaks its current logjam. Have a great week. See you next Sunday.